Good evening, students. Welcome back. So today we'll start our discussion with this new topic now. Okay, so I'll just share the document first of all. So the first one that talks about specialized areas. Okay. Now, what do you mean by specialized areas? So we can say we have these auditing standards, SA 800, which deals with the audit of financial statements which are prepared in accordance with special purpose framework. Now, what is that? So that's something we'll try to understand. SA 805, which deals with audit of single financial statements or of a specific element, maybe an account or an item of financial statement. Then we have this auditing standard 810, which deals with the engagement to report on summary financial statements. Now, what do you mean by summary financial statements? Which are derived from the financial statements audited by that same auditor. Okay, so now if you read this through the plain reading only, you get to understand that these are some specialized topics, isn't it? Means now we are not talking about statutory audit. Okay, so that's the first part of it. So far, in terms of our discussion in relation to statutory audit, we were discussing about various aspects which the auditor is required to consider while auditing the financial statements of a company. Okay, and when you talk about those financial statements, so those are the one which are considered to be a full set of financial statements, which is considered to be the one which is statutorily required to be audited. Now what we are discussing is actually we are going beyond that. Okay, so the first point is we should not be thinking about that statutory audit, right? Because now the scope of the auditor in relation to the audit is completely different. Okay, so that's the first thought process you need to keep in mind, right? So it's a completely different scope altogether. Okay, now in respect of that different scope which the auditor is required to consider for the purposes of that type of audit, what are the requirements? Means what are the auditing requirements? So that is something we are going to cover here. Okay, now let's talk about SA 800 to begin with. Now SA 800 talks about financial statements prepared in accordance with special purpose framework. Okay, so before we get on to audit, we need to understand the underlying. Means what will you audit? Yes or no? Because that's the first thing you need to consider. Means what is it that you are going to audit? Because that will become the basis, right? That will become the basis for the audit of that underlying to be performed. Correct? Now, in this case, when we talk about financial statements prepared in prepared in accordance with special purpose framework, what do you mean by that? Means in a very simple terms, if let's suppose the entity is required to prepare the financial statements other than the one that we just talked about, okay, means the annual set of financial statements wherein the statutory requirement is placed on the company, which will be put to the stakeholders, okay, over which the company will also be required to file that with the regulators. Now, who is that regulator? ROC, CAB. Now, that again varies depending on the requirements which are placed. And at times, that set of financial statements is also required to be sort of, you can say, submitted to some other authorities as well. Okay. So now, actually, what are we doing? Now we are talking about another set. Okay. And that's why you call it as special purpose framework. Why? Because if you talk about the financial statements which an entity prepares, okay, now we are doing something beyond that, and that's why, what do you call it as? It's a special purpose, means it's done for a different purpose. Now, what is that different purpose? That is a specific purpose, and that's why you call it as a special purpose. Now, let's take an example for this. Say an entity is preparing its financial statements from April to March for the purposes of uh, the annual filing requirements, for which the statutory audit is also performed. Now, the entity is also required, let's suppose, by one of its investors to prepare a set of financial statements, say as per IFRS. So currently, the company must be preparing it as per Indian GAAP or Ind AS. Let's suppose the investor requires this to be prepared as per IFRS. Or let's suppose the investor requires the financial statements to be prepared from January to December instead of April to March. Yes or no? Now, will that be possible? Can we say that such type of requirements could be there? Answer is yes. Now, when you prepare for that particular specific purpose, in such a case, what do you call it as? Special purpose framework. And that special purpose framework gives you the special purpose financial statements. Understood? So the financial statements that you get, that's what you call as special purpose financial statements. Right? Now, in this case, let's try to look at some of the definitions also, just to get some technical terminology around it. SA 800 defines special purpose framework as a financial reporting framework designed to meet financial information needs of specific users. Okay, which would be, in most of the cases, be the stakeholders, investors. Now, the financial reporting framework may be a fair presentation framework or a compliance framework. So it could be anything, right? Now, what are the examples? Some of the examples we have already discussed, some more. Cash basis of accounting, and also the cash flow information that an entity may be required to prepare for the creditors. Financial reporting provisions established by a regulator to meet the requirements of that regulator. Maybe a regulator requires a particular set of financial statements with some adjustments in relation to some of the specific regulatory requirements. Financial reporting provisions of a contract, such as a bond indenture, a loan agreement, or a project grant. Right? Now, in this case, when you talk about financial statements, okay, so we are talking about a complete set. Now, what do you mean by that? Means it will include all the elements of the financial statements. Now, what are the elements? Balance sheet, P&L, statement of changes in equity, you have cash flow, then you have these disclosures around the notes, accounting policies. Okay, so now in this case, when you are talking about the financial statements, we are in no way saying that the financial statements will not be a complete set. So that could also be a complete set. The only thing is, now what is that complete set and what will become the basis for preparation of that complete set is something which is specific, right? Now, in this case, now the question rises that if, let's suppose, you were to accept any such engagement. So in such a case, what do you do? See, in this case, you'll have similar sort of requirements. Means for the engagement formalities, you will get into the same acceptance procedures which you will do for any other audit. Okay. So is this going to be anything new? Answer is no. Okay. So means whatever is your understanding in relation to the client acceptance procedure, you will be required to apply the same thing over here as well. Right? Now, in this case, the next question arises that if, let's suppose, any special purpose audit of financial statements is required to be performed. Okay. So in such a case, what do you do as an auditor? See, if you look at the engagement formalities, those are no different from what you will do otherwise, as we just discussed. So if we talk about independence, if we talk about the ethical requirements, means various requirements in relation to the code of ethics. So should those be considered? Answer is yes. Those should also be considered. No doubt about it. Huh? There's no change as around that part. In a similar manner, those will also be required to be considered. So the thing that changes is what? The basis of preparation. Now, in this case, please remember that every time that we are talking about the application of the standard, I would say as far as the audit procedures or the audit approach is concerned, that is not changing. But what is changing? What is changing is the basis of preparation. Okay. So that's a factor which is required to be looked at. So that's you can say is an important point to be looked at. Okay. Now let's move on to the planning. Now, when you talk about planning, and because we have discussed about the audit approach already, okay, we have talked about the audit approach. Now here again, will the auditor be required to perform the similar sort of planning procedures which he'll do in case of statutory audit? Answer is yes. See, this again, being an audit and being a financial audit, this would require the auditor to get into the details. Get into the details around what? Get into the details around the planning procedures, for which understanding of the entity is very important. Understanding of the processes is very important, because till the time that understanding is not thoroughly obtained, okay, so you will not be able to get on to the audit procedures. Will you be able to design the audit procedures? Forget about designing, you will not be able to think about it. Why? Because if you don't understand what is the organization, what is the process, what are the activities, how do you go and audit? You will not be able to do that. Yes or no? Now, similarly, when it comes to the risk assessment, so in this case, will the auditor be required to assess the risk? Answer is yes. Because when it comes to any audit, so the audit is always a risk-based approach, right? So higher the risk, more the, you can say, the higher will be the extent of testing. Now, all of these factors play a very important role, right? So they play a very important role in relation to the audit. Similarly, if you talk about the audit procedures, materiality, will those be required to be looked at in this type of audit? Once again, yes, right? So you can just think about the planning procedures. All of that you will find applicable even in this type of audit, right? Now, moving further. See, in this case, all this while you would have understood what is that one area that we have been focusing upon? Financial reporting framework. Yes or no? So that's the one area which we have been focusing upon. So that's why it's very important. It's very important for the auditor to, okay, sort of analyze that, right? Next, in this case, the next question is around the audit report. Now, if let's suppose you audit this set of financial statement and if everything is okay, so what do? Because it's an audit, so you'll give a clean opinion. Yes or no? And if let's suppose it contains some material misstatements, so in such a case, what do? You'll have to give the modification, right? Now, what could be the modification? So it could be a qualification, it could be an adverse opinion, it could be a disclaimer of opinion, right? So it could be any of these things. Okay. Important part is what? Important part is as an auditor, you need to look into it and you need to analyze. And how do you do that? On the basis of the procedures, the conclusions that you draw. So that will give the auditor the perspective, the thought process as to what is then required to be looked at in relation to the reporting requirements. Correct? Now, see, because this audit is focused upon one area, what is that? Special purpose financial statements. I'm not saying audit, I'm saying special purpose financial statements. Yes or no? So that's why in this case, auditor will alert the users of auditor's report by including an EOM explaining that financial statements are prepared in accordance with special purpose framework and therefore they need to consider that only for that particular purpose and not for any other purpose. Why? Because those have been structured, those have been prepared, those have been designed only for that specific purpose, right? So it becomes the duty of the auditor. Now, how will the auditor alert them? Through the audit report. Yes or no? So, what is the way for the auditor to reach out to the stakeholders? Audit report. Correct. SA 706 requires this para to be included with a separate section of the auditor's report, wherein the heading will be what? Emphasis of matter. Because you are already familiar with what an EOM is, what an emphasis of matter is. So that's why its placement is something which is known to you, right? And in this case, once again, if you go back to the understanding of EOM, now what do you do in relation to an EOM? In relation to an EOM, we discussed that it's about highlighting something, right? It's about highlighting something. Highlighting what? Highlighting something which is already there in the financial statements. Because the auditor is not trying to highlight a particular para of his audit report. No. He's just trying to highlight, bring to the notice of the users of the financial statements that this basis which has been given is extremely important for you to understand. For you to consider as to where do you plan to apply some of these requirements. Okay, right? Next, restrictions on distribution of or use. Now, because because the auditor is giving an alert, so that's why auditor will also include a restriction. What is that? That the report is intended solely for specific users, which actually is true, right? It's meant for the specific users, correct? Now, depending on the law or the regulation applicable, this may be achieved by restricting the distribution or use of the auditor's report. Now, in this case, the next question rises that how do you bring in that para? Correct? So let's read this, because when you read this, you'll get the clarity as to what is included in the auditor's report. Okay. Of course, we'll look at some more examples as well later on. But as of now, to get this clarity around the concept, I think it's important for you to look into it. So the way any EOM will start, and we have this EOM on basis of accounting, and there's also a restriction on distribution and use. We draw attention to note 10 to the financial statements, which describes the basis of accounting. Okay. Financial statements are prepared to assist the company in complying with the financial reporting provisions of the contract referred to. If let's suppose there is any contractual requirement, so what they are doing is they are giving a reference of that. As a result, financial statements may not be suitable for another purpose. Our report is intended solely for the company and DF Limited. Okay, seems to be a group company. And should not be used or distributed to or used by the parties other than these two, means the company or DF Company Limited. Now further, as we have discussed in the previous session, a very important line you will see to avoid any sort of confusion. What is that? Our opinion is not modified in respect of this matter. Okay, so auditor is clarifying here that if you look at the audit report and if you read this para, don't consider that we are talking about any misstatement over here. Okay, clear on this? All right, so now, any questions, any doubts so far? Any questions, any doubts, Prashant?
Not much, sir. So, supposing if in a contract,
Yes,
materiality level is fixed
right.
between a company and, I mean, between the two companies,
Okay,
when the financial statements are prepared as per the contract and a
right,
materiality level is being fixed, still the
right.
auditor will, as you have rightly said, that still the auditor will perform his own materiality check, his own materiality level, performance materiality for conducting this audit. He will not be guided by the materiality fixed by the companies as per the contract. Am I correct, sir?
No, so in this case, I would request if you can just elaborate this. I could really understand what is the fact pattern and what is it you're asking actually.
Supposing, sir, the financial statements are prepared as per the contract,
Okay.
and the contract requires that, say, for example, amounts below 5 lakhs will not be required to be checked. That is the
Right.
materiality level fixed.
No,
So
but
the
why will
audit.
the no, sorry, I'm interrupting you here.
Yes,
Now
sir.
the question arises, why will the contract have any such specification?
So the contract can have a such specifications. It may be possible.
Yeah, you're right. It may be possible. Yes, of course. Okay, so let's assume it's there in the contract. Okay.
Correct.
Now,
Correct,
what
sir.
next? Let's
So the
continue.
So the auditor will not be guided by the materiality level decided between the companies and will drive his own materiality level to perform the audit. That is, I mean, just a clarification. I mean, already you have said that he will perform his own procedures. So that is what I was trying to go into. I hope.
Right.
Uh-huh.
Yeah, I can understand. Huh?
Right. That's it, sir.
So let me just come back to a working file to discuss this point with you. Huh? Just give me a minute. I'll just share this file. See, there are two types of engagements we can say. I won't use any technical term as of now because once we are through with maybe one or two more chapters, then I'll be able to bring that technical terms as well. So let's suppose there are two types of engagements, or you can say there are two different types of scopes. One that you call as audit, and other one is say other than audit. See, when you are talking about audit is required to be performed on the basis of auditing standards. Now, whether this audit is special purpose or whether this audit is, say, a general purpose, audit is audit. Audit will require, say, for example, independence. and the audit approach. You can say audit methodology, audit procedures, all of these. To be decided by auditor. Now coming back to your example, for an auditor, management may not decide that you perform this procedure and you don't perform this procedure. No. It has to be decided by who? Auditor himself. Who will decide that? Auditor himself. Okay. So auditor will have to decide this. Let's suppose if the management says that, say for example, you perform 20 procedures. Exactly similar to what you will do in case of audit. And 5 procedures which an auditor may perform during an audit. Let's suppose management says you don't do this. Now this situation is not called as audit. This arrangement you will not be able to call it as audit. Why? Because there's a restriction which has been placed upon the auditor. When it comes to the audit, any restriction cannot be placed. Okay. So if you are asking the auditor that don't do this, that's not an audit. Now, if that is not audit, it may be any other form of attestation. Now, what is the nature of that project? What is the nature of that engagement? What is the scope? Some of those factors, means in terms of that detailed scope, will decide as to what is that. Okay. Prashant, clear this?
Yes, yes, sir. Perfect, sir. Thank you.
Okay. Yeah, sure. Now, moving further. Let's talk about this other auditing standard, SA 805. Now, what do you have? Now, in this case, once again, what do you find? It talks about audit of single financial statements and specific elements, accounts, or items in the financial statement. Now, here again, what do you have? If you look at the scope, that's no doubt audit. Correct? That is clearly audit. But in this case, if you look at the underlying, I think important part is to understand what is required to be audited. Means single financial statements. What do you mean by that? Specific elements, accounts, or items of financial statements. What is meant by that? Because till the time you don't have a clarity on that, you will not be able to apply this auditing standard. Correct? So important to understand these terms. So let's understand what are these terms, right? Sorry, I'll just share back the screen. I think the screen is disconnected. Okay, now. A single financial statement is to be distinguished from a complete set of financial statements. So what do you mean by that? Say, for example, cash flow statement in this complete set. What do you call it as? Single financial statement. Okay. Now, when you talk about elements, I think elements could be various. Element means an element, account, or item of a financial statement. It could be a trade receivable in a financial statement, cash balance in a financial statement, bank balance in a financial statement. Yes or no? Right? Now, here again, what do you have? Here again, if you look at the requirements in relation to audit, okay, just simply think about it. Now, what are the requirements of audit you may have? Prashant, would you like to give this a thought? Okay, attempt this as to what is it you'll do when it comes to audit of such type.
He will perform the planning, like he will perform the planning, understanding the entity and the systems. He will design the procedures around this. He will perform risk assessment, assess the risk, and
Okay.
materiality will be looked into, just like in the normal.
Now the question
But
rises. Now the
okay,
question is that why do you need that? Okay, so let's suppose you will perform planning. So can you tell me what is the role of planning in this type of audit? Any thoughts? Yes.
so without planning, how will the auditor proceed? I mean, he will have to have the understanding what type of financial statements are there, what is the framework and the entity, what is the requirement. So accordingly, he will design the procedures and do the risk assessments and assess the controls, and what is the scope of his audit, what is the requirement.
Very good. As you nicely mentioned, that till the time we don't have an understanding, how do we perform the audit? Yes or no? For the audit to be performed, what do you need? You need a clear cut understanding. Okay. So that's why what do you do? That's why planning you'll have to do here. And please also understand the fact that once again, even though the thing which is required to be audited is a different. Why? Because it's not a complete set of financial statements. Maybe it's a part of that. Maybe it's about some of the elements of the financial statements. But what is the scope? Scope is audit only, right? So the important part is to understand the scope. That the scope is once again audit. Correct? Now,
Since he will be required
yes,
to perform the all the procedures like going concern and all those procedures, he may want to be the auditor itself, not accept the single element audit. He,
the
from
yeah,
the practical point of view, practical, and because the efforts would not be commensurate, because he will be doing all the assessment, risk assessment, going concern assessment. So he may want to do the audit of the entity itself along with this, or he may
exactly.
or
Yes.
he may or he may ask them to for some other engagement as compared to this. This is what I read some months ago, sir. If I remember, I don't know.
No, that's good, and that's actually a good thought. an appropriate thought. Now, the point is that if let's suppose you were to audit, say, a particular item, okay, forget about a single set. Let's suppose we are talking about trade receivables. Practically, who will be performing this? Practically, it is performed by the ones who are also performing the statutory audit. Why? Because they will have the understanding, they will have the clarity, they will also be knowing as to what is there in the financial statements. Okay. Because as you rightly mentioned, if let's suppose a person comes who doesn't have the understanding, okay, so what will you do? If let's suppose he is trying to limit himself to the trade receivable, which no doubt is required to be done without the understanding of any of the things which may have an impact on the trade receivable, will it mean that the proper risk assessment has been done? The answer is no. No. It will imply as if risk assessment is improper. Correct? And the same thought goes around various other types of considerations which the auditor needs to have in place. But does it mean that the auditor will have this complete full blown set of, uh, or you can say, a full blown sort of audit of financial statements, and he will be doing a lot of activities which are required to be done in case of audit of financial statements, whether or not it may or may not have any impact on the, say, the audit of a single set or maybe audit of that particular line item? Answer is no. Answer is no. Why? Because to that extent our scope is reduced. Okay, so if you don't have anything in the scope, you may always go beyond that if you believe you will be able to have any evidence around it, otherwise not. Okay, right? Now here again, in relation to the opinion, auditor will be looking at the opinion as to what the opinion is required to be given. Clear? Any thoughts? Any
Yes.
doubts?
No, sir. No, sir.
Okay. Manish, if you have any questions. No? Sure? Okay. So now, okay, Manish is also clear on this. Very good. Now, in this case, because it's an audit, so that's why expression of opinion is required. Yes or no? So that will have to be done. Correct? In which case, similar sort of reporting requirements will have to be thought through, will have to be considered by the auditor. Right? I think over this aspect, once we get into the examples, you will have some more clarity. But let's look at this part. See, it says SA 800 means that audit of special purpose financial statements, and 805 do not override the requirements of other essays, nor do they purport to deal with all the special considerations that may be relevant in the circumstances of the engagement. So therefore, what should he do? Therefore, he needs to consider the fact that if let's suppose it's an audit, so you can't just simply ignore the other audit procedures. So those have to be in line with what you'll also be doing here. Clear? Now let's look at some examples of the specific elements, accounts, or items. Accounts receivable could be there. Allowance for those receivable could be there. Okay. Inventory is one. That could also be there. Liability for accrued benefits of a private pension plan. Recorded value of identified intangible assets. Liability for incurred but not reported claims. Schedule of net tangible assets. Schedule of disbursements in relation to a lease property. Right? So you can have various examples around it. Okay. Now, let's move on to the third part. Now, this one again, I would say requires an understanding of what is required to be checked. Now, in this case, if you read this name of the auditing standard, this is slightly different. I'm not sure whether you have noticed this or not. SA 810. It deals with auditors' responsibilities when undertaking an engagement to report on summary financial statements derived from financial statements audited in accordance with auditing standards by that same auditor. So, what does it mean? Let's suppose say we are talking about this summary. Huh? Okay, so let's suppose these are the financial statements of AB Limited. Who has audited this? PQR and company. So that has audited this, right? PQR and company has audited this. Now let's suppose from this financial statements, keeping this financial statements as a base, say some summary financial statements are prepared. Very commonly, if you've heard about it, abridged. Okay. Now, in that case, this standard is talking about engagements to report on those summary financial statements. Means we are talking about this. Right? And in this case, the auditing standard doesn't use the term audit. What does it require? If you go back, let's see this. What does it require? Engagements to. It's not audit, right? Engagements to report on. Okay, right? So that's why it's important to understand what are these engagements. Okay, because only then we'll get the clarity. Now, here again, I think first of all, we should have a clarity around what a summary financial statement is. So, a summary financial statement reflects historical financial information that is derived from financial statements only. But this summary financial statement contains less detail than the financial statements, while still providing a structured representation consistent with that provided by financial statements of an entity's economic resources. Or you can say obligations at a point in time or changes therein for a period of time. Okay. Now, now in this case, because we are talking about an attestation engagement, so will there be engagement formalities for this type of engagement? Answer is yes. That independence, ethical requirements, you can say code of ethics requirements, all sort of requirements are required to be considered. Now, preparation of summary financial statements requires management to determine the information that needs to be reflected in summary financial statements so that they are consistent in all material respects with or represent a fair summary of audited financial statements. Because the summary financial statements by their nature contain aggregated information, limited disclosure. That's why there's an increased risk that they may not contain information necessary to so as not to be misleading in the circumstances. Now, this risk increases when the established criteria for the preparation of summary financial statements do not exist. Okay. Now, as regards this audit objective, the objective to perform the procedures. Now, what do you do in this case? Let's look at the procedures. Evaluate whether the summary financial statements adequately disclose their summarized nature and identify the audited financial statements. Now, this is very important. Now, one has to understand the fact that summary financial statements have a basis, okay? Or you can say their origin point is what? Financial statements which are audited, okay? So that's where somewhere they need to be linked to that part, okay? Because if let's suppose you are the stakeholder, say you are looking at the financial statements of AB Limited, full set, complete set, and you want to look at this summarized version also. So if there is anything around the summarized version, if let's suppose you have the access to only summarized, you want to get into the details, how do you do that? Correct? So that's why this linkages really helps. Correct? Okay. Next, when the summary financial statements are not accompanied by this audited set of financial statements, okay, evaluate whether they describe clearly from whom or from or where the audited financial statements are available, or the law or regulation that specifies that the audited financial statements need not be made available to the intended users of the summary financial statements and establishes the criteria for the preparation of summary financial statements. Okay. Next, evaluate whether the summary financial statements adequately disclose the applied criteria. Okay. Compare the summary financial statements with the related information in the audited financial statements to determine whether the summary financial statements agree with or can be recalculated from related information in the audited financial statements. Next, evaluate whether the summary financial statements are prepared in accordance with applied criteria. Evaluate whether the summary financial statements contain the information which is necessary. Evaluate whether the audited financial summary financial statements without undue difficulty, because only then those stakeholders will be able to make appropriate decisions. Correct? Right? Now, in this case, when the auditor has concluded that the opinion is clean on the summary financial statements, auditor's opinion shall, unless otherwise required by law or regulation, use one or more of the following, one of the following phases. First, accompanying summary financial statements are consistent in all material respects with the audited financial statements in accordance with applied criteria. So this is the first option. Next, accompanying financial statements are a fair summary of the audited financial statements in accordance with applicable criteria. Right? Next, I think procedures we have already talked about. Now, audit report when it comes to the summary financial statements, for which I just mentioned that the very common example for that could be the abridged version of the financial statements. Okay. Now, what do you have in the auditor's report? A title to begin with. Okay. Indicating it's a report of independent auditor. That's one. Addressee, right? Identification of summary financial statements on which auditor is reporting, including the title of each and statement included in the summary financial statements. Identification of audited financial statements. Clear expression of an opinion. A statement indicating that summary financial statements do not contain all the disclosures required by financial reporting framework, which is true. Yes or no? And that reading the summary financial statements and the auditor's report thereon is not a substitute for reading the audited set of financial statements and the auditor's report thereon. Okay, now this is a very important part, right? If required, then a statement that the summary financial statements and the audited set of financial statements do not reflect effects of events that incurred, that occurred subsequent to the date of auditor's report. Okay. Reference to the auditor's report around what? On the audited financial statements. Date of the report, fact that unmodified opinion is expressed. Right? Now, here again you have these similar sort of reporting requirements. So I'll just skip that part. Here again you'll have this restriction on or distribution caveats, right? So then I think we have largely discussed about some of these auditing standards. So now I think what we can do is we can look at some examples. Just a minute, I'll just open the document. Okay, let's look at this. All right, so let's look at this, and I would request you to attempt this then. CA Lalita is the auditor of a company. Okay. She is also offered professional work in relation to audit of financial statements prepared specifically. Now, this part is important. Prepared specifically for meeting the requirements of a loan agreement for the same period. She chooses to accept the work and has made up her mind to disclose this fact in the emphasis of matter paragraph in the audit report to be issued by her for this specific engagement. Now the question arises, is her approach proper? Over to you. Yes, quickly.
Yes, sir, the approach is proper because SS 706 requires the SPARA,
Right,
emphasis of matter. It is about highlighting something which is already there in the financial statements.
correct.
It is the duty of the auditor to alert the users through his report that
Right.
these statements are prepared for meeting requirements of a loan agreement.
Okay. Any more thoughts? Manish, anything you'd like to add here? Yes, Manish, over to you. Anything you'd like to add here? No? All right. So let's look at this.
Restriction on distribution of use also she will state,
Yes, very
and
good.
her opinion is not modified.
Okay. And that is required to be given so that it's clarified that we are not talking about a misstatement here. Correct? Now, in the given situation, approach of Lalita is proper. There is no bar upon accepting such an engagement, even though she is the auditor. Besides, she has intended to disclose this fact. Okay, right? Next, CA Lakshmi has prepared a draft audit report for the financial statements of X Limited, prepared in accordance with financial reporting provisions of a contract with Y Limited. Right? She has drafted an unmodified opinion as is given in the audit report. Besides, she has also drawn attention in the draft audit report to note A, which describes the basis of accounting under the heading basis of accounting. How she should ensure that report would not be misused. So that's one. Number two, draft a suitable para to be included in the report for this purpose. Yes, tell me, over to you. Anyone, any thoughts?
So she will include a para that restriction that this report is only for specific users,
Okay,
depending on law and regulation requirement.
right,
And the para she will draw is that we draw our attention to note X to the financial statement, that the financial statements are prepared in accordance with the uh, contractual account, which this basis of accounting which is described under head note A,
right,
and the financial statements may not be suitable for any other purpose, and report is her report is solely for the purpose, solely for the this users for this of this company, and it shall not be used or distributed by parties other than this, and her opinion is not modified in respect of this matter.
correct. So if you talk about this last sentence, why do we give this? To clarify that because we are not talking about any misstatement here. So now, if you look at this given situation, C. Lakshmi may consider it appropriate to indicate that the auditor's report is intended solely for specific users. Depending upon the law or regulation which is applicable, this may be achieved by restricting the distribution or the use of auditor's report. Okay. The paragraph alerting the readers may be expanded to include these other matters, and heading can be modified accordingly. For example, okay, for example, without modifying our opinion, we draw attention to note A, which describe the basis of accounting. Okay. Financial statements are prepared to assist the company to comply with financial reporting provisions of the contract. As a result, financial statements may not be suitable for another purpose. Right? Our report is intended solely for X and Y. Should not be used by or distributed to parties other than whom? X and Y, because it's meant only for them. Okay? Clear? Next. Right. So let's read the next one and let's try to then get on to this discussion. CAM Surya is the auditor of financial statements of an entity prepared in accordance with financial reporting provisions of a contract. He has also offered, so he is offering an audit of receivables appearing in the above financial statements. Now, first question, can he accept such an engagement? Discuss brief outline of his audit approach. Yes, quickly. Anyone? Any thoughts?
So he can accept such an audit. That
Okay.
is correct.
And why so? What are the thoughts you may like to share? What are the thoughts?
Because he's already auditing the financial statements.
Okay.
So if he is offered an audit of a element, he can accept such an engagement because he's already performed the procedures in respect of the financial statements.
Correct. Good. Now, in this case, the single financial statement or the specific element or the account or the item, in this case, financial statements of an entity are prepared in accordance with financial reporting provisions. It's a special purpose framework. Clear? Auditor of the financial statements prepared in accordance with what? Special purpose framework. Okay. Now, this auditor of the financial statements is also offered to audit. Now, that's what our understanding is also there. Audit trail receivables, which relate to the audit of elements of the financial statements. Hence, his approach should include considering requirements of both SA 805 and 800. Clear on this?
So why
Right?
800? 800 is not there in this question, sir. There is no mention of a contract. Is there?
No, so by 800, why do you think it will only be in relation to a contract?
No, it is either in relation to a contract or to a regulator or to a creditor, say.
No, so let's try to understand this part.
So, sir, in the question, is it given, sir? It is
No,
not
so,
given.
no. So let's go back to the question, okay? What does the question require? It says financial statements of an entity prepared in accordance with financial reporting provisions of a contract. That's what the question specifies. So, what is the basis of preparation? Financial reporting provisions. So, it's a special purpose. Clearly, is it a special purpose or not?
Yes, sir.
Yeah. So, the moment you say that, where do you go?
800.
Okay. Clear?
Correct.
Okay. So, Manish has a question. I think Manish, maybe you missed out on the part. So he's asking what is the difference between SA 800 and SA 805? Manish, tell me first of all, do you have the understanding of both of these auditing standards? Of course, you want to differentiate, which is okay. But tell me, do you have the understanding of? Okay, very good. So, Manish, can you please explain about both? Quickly, huh? I think you'll have to unmute yourself. And once you unmute, then you will be able to sort of clarify. Yes, quickly. If you can just elaborate that. So Manish is saying, I am in library, I can't. No, but I think you'll have to explain this. Yeah, so can you please explain this? Maybe if you write it down, let me just understand what is your thought quickly. What is your thought? Okay, so Manish says that 800 is the one for special purpose. 805 is the one is a which is not for special purpose. So can you tell me why do we have this 805? So you say that this is not for special purpose. So what is this for? Tell me quickly. What is this for? Okay, great. So Manish says 805 is not for special purpose. It's in relation to the single set. So I think Manish, you yourself have explained this. So when you talk about special purpose, 800, what was that for? That deals with complete set. But when you talk about 805, does it deal with complete set? Answer is no, right? Yeah, so that's the underlying difference. Correct? Clear on this, Manish? Yeah, clear on this? Right? Okay, great. Any more questions if you have? No? All right. Okay, so let's move further, right? Next, we can look at the next question now. CAG is offered appointment for audit of trade payables. Okay, only the trade payables. However, financial statements prepared under Companies Act are audited by CA Jignesh. Now there's a difference. Huh? G is offered what? Audit of trade payables. Right? But if you look at the financial statements of the company, the financial statements are audited by who? CA Jignesh. Discuss why it would be practically difficult for G to perform such an audit. I think this is quite straightforward. Yeah, anyone would like to discuss this?
Yes, sir, because CAG would be required to perform all the procedures while auditing, while accepting the audit of payables. He will perform all the necessary procedures which are required, including going concerns. So the extent of work which he would be extent of effort he would be putting in will not be
Right,
commensurate, and it will be practically difficult for him. So he will not accept such an audit. He will may request the management to give him some other appropriate assignment.
right. See, now in this case, if you look at G and if you look at Jignesh, these are two different auditors. For Jignesh to work on what G has been offered, Okay, becomes very easy. Why? Because Jignesh has already audited the financial statements. He knows everything inside out, right? For him to therefore comment upon anything which is there in the financial statements, example, this trade payable, it becomes relatively easier. Correct? So that becomes relatively easier for him. Yes or no? And in a similar manner, if you look at it from the perspective of G, see, for G to audit trade payables, what will he need? He will need understanding of the entity, various processes which may have some impact on trade payables, risk assessment around it. There could be some other areas as well which may be impacting the trade payable. For example, procurement as a whole is one process. You'll have to get into the detail. Correct? So that's why we are not saying that G will not be able to perform this engagement. Of course, he can do that. He can perform this whole lot of procedures. But if G does this work, okay, then you are saying actually it's an efficient way. Why? Because for G to for Jignesh to perform these procedures will be like, you can say, quite easy. Or you can say, in a way, he would have already done that as a part of his audit of financial statements as well. But for G to do that will be, in a similar manner, quite difficult. Right? Right? So now, compliance with the requirements of auditing standards relevant to the audit of single financial statement may not be practicable when the auditor is also not engaged to audit the complete set. In such cases, auditor often does not have the same understanding of the entity and its environment, including its control. Okay. Accordingly, auditor may need to further evidence to corroborate the audit evidence acquired from accounting records. In case of an audit of specific element of financial statement, certain auditing standards require audit work that may be disproportionate to the element being audited. Right? If the auditor concludes that an audit of a financial statement, single financial statement, or a specific element may not be practicable, the auditor may discuss with the management whether another type of engagement might be more practicable. Means, instead of doing this work, can this engagement scoping be changed? Okay, right? So that's the thought process. Generally, you'll say which looks more logical. Correct? Now, let's look at the next one. CA Madhur happens to be the auditor of a company and has issued audit report dated 15th June of a particular year. Right? We are talking about audit report dated 15th June. Audit report on summary financial statements derived from such audited financial statements is dated 15th July of that particular year. Discuss whether there exists any additional reporting responsibility for auditor in such a situation in respect of audit report on summary financial statements. Okay, right? Yes. Any thoughts?
CA, CA Madhur will mention in his report that these financial statements are summary financial statements and are derived from the main financial statements and are consistent with those financial statements, and they are a fair summary of the audited financial statements in accordance with the applied criteria.
Okay, good. I think Manish has a query. Manish, I'll come to your query slightly later. Saminathan says, I think he's talking about the auditor need to disclose events that occurred subsequently. Okay, so let's try to look at this. See, the audit report on the summary financial statements derived from audited financial statements is dated 15th July. However, audit report on audited financial statements is dated 15th June. Clearly, there is a gap. Yes or no? In the above situation, auditor's report on summary should state that summary and audited set do not reflect effect of events that occurred subsequent to date of auditor's report on the audited financial statements. Yes or no? Right? Becomes very important. Correct?
Sir, I have a query, sir. I mean,
Yes.
what I wrote, what I gave in the answer, and
Yes.
I mean, how much impact does it make? Is it completely wrong, or there will be some saving grace in that answer?
See,
This
important
is
part is
uh,
no, I can understand your query. See, important part is what is the question requiring you to answer,
correct, sir.
isn't it?
Yes, sir.
So, if let's suppose I'm asking you about, say, something
Mhm.
which you may or may not know, I don't know, but you are answering something else. Whatever you are answering is correct. Technically, that is correct. But was that a question which I asked you? If you say no, this is not what you asked for, but I have provided my answer, which is technically correct. But that's not the question, isn't it?
Yes, sir.
I'm just hoping you're getting the perspective, huh?
Correct, sir.
Okay, so that's why many a times what happens, I would associate a couple of problems which are attached to this. Okay, why I've just stressed upon this point. And again, this is not in relation to the response you have just shared, Prashanta, because I don't think that you overlooked the question. There are a couple of problems which is generally faced, and this is a very common observation. Most of the time, students don't give appropriate time to reading of the question. What do? They are in a hurry. There's no doubt time is limited. I agree. But they are in a hurry. What is the hurry? What is the rush? They want to finish the answer as quickly as possible. Okay. Ignoring the fact that what they may be writing, what they may be answering is not really required. Maybe because they were rushing, so that's why they have not been able to understand what was there in the question. Yes or no? So that's why, even though they know the subject, they have the knowledge, they have the conceptual understanding. Where do they are? in their strategy. What is their strategy? Their strategy is wrong. Strategy is the moment I get the question paper in hand, I'll just start filling the answer sheet. But ideally, what should you do? As part of your examination strategy, I would say you should always be planning the minimum time. I'm not saying the maximum time, the minimum time that you will devote to reading of the questions. Because if you understand the question properly, after that, it's all about answering that. I agree that to write an answer takes time, but you need to give the respect to the question also. And how will you do that? Only when you are able to understand. So generally, what do we say? That listen properly, because if you listen properly, you will be able to answer. Yes or no? So same goes with the question paper also. Because if you read that properly, you may be able to answer some of the things which you don't read properly. Okay, so that's one problem to this. So I was just saying a couple of observations. So this is one. Second is, many a times students do read the question properly, but their assessment, or you can say their analysis, is wrong. See, there again, there are two parts. Let's suppose there are two auditing standards. Okay. And let's suppose a student knows both the auditing standards thoroughly. When he read the question, let's suppose he analyzed that this requirement is coming from auditing standard 1, not from 2. So that is again a mistake. So why will that mistake be made? Because if you don't get into the conceptual clarity, if you just mug up the concept, why? Because you have just crammed that. Okay, maybe the questions also you have learned, but you have not understood. In those cases, your analysis may go wrong despite reading the question properly. Now, how do you fix this problem? Both the problems. See, first problem is simple. It's all about your strategy. It's all about your planning for the examination. Because accordingly, you will be practicing also. What about the second one? Second one is all about your overall approach. Yes or no? Because what is your approach? Is your idea to just cram the things, or maybe just to flip through some of these requirements? Then of course chances of making the second type of mistake will continue. But if you say no, that's not the case, then of course your chances of making such type of mistake will automatically get reduced. Clear, Prashant?
Yes, sir. Thank you so much, sir.
Sure. Then I think I have this question from Manish. Let me just go back to this. Okay, so now he's asking about this question number 4, I guess. Let me just look at this one. He's saying, I have a doubt that G is not relied. Is not relied work which does. No. So see, I think it's not about whether G is required to rely or not. Nowhere in the question there is a requirement that G needs to rely on the work of Jignesh. No, that's not the requirement. And anyways, G can't do that, isn't it? G can't do that. And that's not what we also discussed. What we discussed is that if, let's suppose, G were to audit, so what will he do? Let's suppose as a part of his audit procedures, G decides that he will have to perform 20 audit procedures. Why? Because for trade payable, 20 audit procedures will be required. But let's suppose when Jignesh has audited the financial statements, while auditing the financial statements, he performed 20. Okay. And in relation to these 20, sorry, he performed 100, and in relation to these 20, 18 are already covered in that 100. Okay. So now, if let's suppose Jignesh were to audit trade payable, what will he do? He will start with 18 and he will do +2 and he's through. So the efficiency is there if Jignesh were to audit, and inefficiency is there if G were to audit. Okay. Manish is asking, but sir, Jignesh is also qualifying as CA. See, it's not about whether both are CAs or not. It's about the fact that Jignesh has already audited the financial statements. I think Manish, somewhere again you are performing that first type of mistake, most likely. That maybe you have not understood the question. If you've done that, then somewhere I feel you are not clear on this concept. Okay? Clear on this? Yeah, Manish? So I think before we move further, what we can do is we can just quickly take a break, right? So let's continue our discussion after the break. Huh? Okay, so let's continue. Just give me a minute. All right, so let's look at the next one. Consider that the audit report on the financial statements issued by CA Madhur for the above said company contains qualified opinion. Okay. Can he issue an unmodified opinion on the summary financial statements derived from audited financial statements which contain a qualification? What is your thought? Over to you. What do you think? Any thoughts?
So can we have the previous question?
Yeah, sure. Let me just take you to the previous one. This is the previous one.
Okay, sir.
Yes.
So he will express that the main audited report contain a qualified opinion. He will make a specific mention of that fact.
Okay. Anything else on this? Anything that you would like to add, Saminathan, maybe?
Yes, sir. In this case, that complete financial statement is prepared on 15th June. However,
Okay.
that summary financial statement is derived from that, and it's a 15th July. The
Okay.
only thing is that in between the 15th June and the 16th June, is there is
Right.
any subsequent event is happened or
Yes.
not? That
Right.
is material or not, that has to be disclosed in the report.
Okay. All right. So now let's look at this, right? If the auditor is satisfied that the summary is consistent in all material respects with, or it's a fair summary of the audited financial statements. In such a case, what will he do? Of course, he will issue unmodified opinion in such a case, right? However, when the auditor's report on audited financial statements contain a qualification, then auditor's report on summary financial statements shall also contain the following. State that the auditor's report on audited financial statements contain a qualified opinion. Describe basis for qualified opinion and the qualified opinion in the auditor's report on audited financial statements. Effect thereof on summary. Now let's try to understand this first of all.
So he has not clarified whether he can issue an unmodified opinion vis-a-vis the qualified opinion in the main statement. He has not given this answer.
Yes, so that's why I'm just clarifying this point. Now, what is a summary? You have your base. Let's suppose this is the financial statement, which is the base. Now, this base becomes the basis. For what? For this summary. Because summary is what? Summary is derived from the base. If the base is wrong, then obviously the summary will always be wrong. Isn't it? Right? Now, in the given case, question arises, can he issue unmodified opinion on summary? In this case, when the auditor will report on summary financial statements, what will he specify? He will specify that the auditor's report on the basis. What is the basis? This is the basis. Contains a qualification. Right? And he will also be giving the details around it. For example, the basis for qualified opinion on the audited financial statements. And that the qualified opinion in the auditor's report on audited financial statements. Effect thereof. Now, when is the auditor doing this? Let's try to understand. So the situation we are referring to is that he has found summary to be consistent with the basis. Okay, so when the summary, see what is the objective of summary? Let's try to understand that. Or what is a summary?
So can I have a question, sir, before?
No, of course, I'll get on to that. But let's try to understand the perspective. I'm just trying to explain you the concept. And of course, then we can go back to the question. See, the point is that if let's suppose your financial statements are all right, they are good, means they show true and fair view. In that case, what is a summary? Now, summary is nothing but, you can say, a reflection of this financial statements.
Mirror reflection.
Yes or no? It is nothing but a summary, or you can say a reflection of what is there in this. Let's suppose this is your A and this is B. B is what? B is nothing but a reflection of what is there in A. A is a detailed document, B is a summary of that. If you say A is wrong, then obviously its summary will always be wrong. But as an auditor, what is your objective? Your objective is two things. To check whether this is clearly a reflection or is this summary anything which goes beyond the basis, which shouldn't happen. Right? Which shouldn't happen. Correct. But if let's suppose that's done, that basis is done, means consistency is there. In such a case, what do you do? In such a case, one will have to only specify the fact about what? About this basis. That what are the problems in the basis. So as an auditor, what are you saying? You are saying that it's consistent, but the basis is something which is inappropriate. Okay. Now coming back to your concern, Prashant, we are moving with an understanding with what? Auditor is satisfied that the summary financial statements are consistent. And he is issuing an unmodified opinion on summary. But because his basis is not appropriate, that's why he is writing these points. Okay, now let me just take you back to the question also. Maybe there is some clarification you want from the questions. And then you can just confirm whether it looks okay to you now or you still find some problems over here. Yes.
Shall I say, sir?
Yeah, of course.
So what I'm asking is, A, whether the requirement in as per SA 810 in respect of the report is
Right.
only on the consistency part, that the financial statements are consistent. That is all the auditor has to see.
Correct.
And and B, since in this case he has given made a para that the main statements are qualified. It is not a
Right.
clean. It contains qualification and the basis also. So can we
Right.
say he has issued an unmodified opinion? There are two questions, sir.
See, to say whether he is issuing an unmodified opinion is again on the basis of two things. What are those? One, whether the summary is consistent in more material respects with the audited set of financial statements. Or two, that's why I'm saying or two. What is two? That summary is a fair summary of audited financial statements in accordance with the applied criteria, means whatever basis you will consider. Okay, does that answer your question, Prashant?
So sir, are we saying is it a fair summary or not, sir?
Yes, of course. See, the solution is moving with that assumption. While giving this answer, we are moving with this assumption that it's a fair summary, it's consistent. That has become the basis for us to answer this or give this solution.
Okay, sir. Correct, sir.
Fair?
Correct, sir. Thank you.
Sure. Anyone else? Saminathan, any questions if you have on this?
No, sir, it's very clear now.
Okay, very good. Anyone else?
Sir, Swaminathan will soon be a faculty, sir. He has got 58 marks in audit.
Oh, very good. That's congratulations. It's so great to hear about this. Very good, Saminathan. All right. So now let's move further. Let me just move this to one page, to single page. Okay. Now, Mr. BK has been engaged by XYZ to report on summary financial statements derived from financial statements audited by him. BK wants to determine whether the applied criteria are acceptable before accepting such assignment. Guide him the factors affecting auditor's determination of acceptability of applied criteria as per relevant standards of audit. Yes, over to you. Any thoughts? Quickly.
Sir, the factor is affecting is that the first we need to look into the applied criteria or the nature of the entity, the purpose for which the summary financial statement is prepared, and
Right,
also we need to know the intended user of the summary financial statements.
right. Any more thoughts? Prashant, would you like to add something over here?
He will perform the independence check and the ethical requirements, whether these code of ethics are being fulfilled, all those aspects.
Okay, good. So let's look at this. In the given situation, BK has been engaged by XYZ to report on summary financial statements derived from financial statements which are also audited by BK, which is a good thing and which is the ideal situation to be into. BK wants to determine whether the applied criteria is acceptable. Now, if you apply the requirements of auditing standard, engagement to report on summary, before accepting an engagement to report on summary, auditor shall determine whether the applied criteria are acceptable. Now the question arises, what is that applied criteria? So the applied criteria refers to criteria applied by the management in the preparation of summary financial statements. Now the factors affecting the auditor's determination of acceptability of applied criteria. Now what are those factors? One, nature of the entity, of course, purpose of summary financial statements, information needs of intended users of summary financial statements, whether the applied criteria will result in summary financial statements that are not misleading in the circumstances. Okay, right? Clear?
Yes, sir.
Sure. And now what we can do is, just give me a minute. I think we can look at one case scenario. Huh? Again, basis this. Just give me a minute. I'll move on to this case scenario. So let's look at this. Given below is an extract of abridged financial statements. Okay. And this is for the scheme of Smart Investment Mutual Fund. Now the abridged financial statements have been derived from audited financial statements of the schemes of Smart Investment Mutual Fund as at 31st March XX and for the year ended 31st March XX. So you are given this abridged balance sheet. Okay, so in the two columns you have this information about equity and debt fund and only equity saving fund. Okay, so this is the typical format you will find for any balance sheet of a mutual fund. You have this unit capital, reserves, liabilities, provisions, then the assets. Primarily the assets will be the investments because that's what the mutual funds will have. Deposits and other current assets. Abridged revenue account for the year ended, you are given below. Income, expenses and losses, net realized gains, change in unrealized appreciation in value of investments. Then you have this net surplus, dividend appropriation, retained surplus. Okay. Abridged financial statements of the schemes of the fund have been prepared by Board of Trustees of the fund pursuant to SEBI regulations and in accordance with the format prescribed by SEBI. Previous year figures have been ignored for the purpose of case. Unmodified opinion has been expressed by auditor in the audited financial statements of the schemes of Smart Investment Mutual Fund as at 31st March XX and for the year ended 31st March XX. Keeping in view above, answer the following questions. Given the above extract of abridged financial statements and the description, which of the following statements is most appropriate? Okay, so in this case, we are looking at this MCQ. So which one you believe is the most appropriate? Auditor may presume that the criteria applied by Board of Trustees in the preparation of abridged financial statements are acceptable. Auditor cannot presume that the criteria applied by Board of Trustees in the preparation of abridged financial statements are acceptable. Third, abridged financial statements have been prepared by Board of Trustees. Auditor cannot ordinarily accept the criteria applied by them for the preparation of such abridged financial statements before detailed evaluation. Auditor is duty bound to accept the criteria applied by Board of Trustees in the preparation of abridged financial statements. Tell me, which of the following you think is the most appropriate answer? Okay, Saminathan says A. Okay, very good. So let's look at the option. So if we analyze the option, what is the correct answer? Auditor may presume that the criteria applied by Board of Trustees in the preparation of the abridged financial statements are acceptable. So will it be right to say that? Answer is yes. Okay. Next. Which of the following statements in reference to abridged financial statements is not in accordance with the auditing standard 810? A. The notes to accounts should specifically disclose that these abridged financial statements have been derived from audited financial statements. Please remember, we are required to give the option which is not in accordance with 810. Board of Trustees has disclosed that the audited financial statements are available on the website of the company. It should be stated in the auditor's report that abridged financial statements have been compared with related information in audited financial statements to determine whether the abridged financial statements agree with or can be recalculated from related information in the audited financial statements. D. It should be stated in the auditor's report that reading the abridged financial statements is not a substitute for reading the audited financial statements. Yes. Which one do you think is the correct option? Correct means something which is not in line with 810. Okay, so please understand the meaning of correct here. Saminathan says it's C. I think clearly it's C. Why? Because if you look at A, B, as well as D, are these required to be performed? Or do you think these are the requirements of the auditing standards? Answer is yes. C is the only one which is not the requirement of auditing standard. Okay. Which of the following paras is most appropriate to be included under the heading Auditor's Responsibility in the Auditor's Report? A. Our responsibility is to express an opinion on the abridged financial statements based on our procedures, which were conducted in accordance with auditing standards issued by ICAI. B. Our responsibility is to express an opinion on the abridged financial statements based on our procedures, which were conducted in accordance with auditing standard 810. Then you give the name of the auditing standard issued by ICAI. C. Our responsibility is to express an opinion on abridged financial statements based on our procedures, which were conducted in accordance with standards of auditing adapted in the circumstances, including SA 810. D. Our responsibility is to express an opinion on abridged financial statements based on procedures which were conducted in accordance with SEBI regulations and auditing standards adapted in circumstances. Tell me, which one you think is the most appropriate option? Tell me quickly. Tell me which one is the right one. Okay, great. Saminathan says it's B. I think B is the most appropriate one. Yes or no? B is the most appropriate one. Why? Because if you look at C and D, to say auditing standard adapted in the circumstances, do we have any such requirement? Answer is no. If you look at A, when you are not mentioning the auditing standard, okay, then of course it appears to be quite vague. Yes or no? So that's why clearly what is the right answer? B. Next. Which of the following paras is most appropriate to be included under the heading opinion in the auditor's report? Okay. In our opinion, abridged financial statements derived from audited financial statements of the schemes of fund as at March 31 XX for the year ended are a fair summary of those financial statements and are in accordance with accounting policies and standards specified in SEBI regulations and generally accepted accounting principles in India to the extent applicable. B. In our opinion, abridged financial statements as at 31st March and for the year ended are a fair summary of those financial statements. C. In our opinion, abridged financial statements derived from audited financial statements of the schemes of the fund as at March 31 and for the year ended 31st March are consistent with audited financial statements and are in accordance with accounting principles and the standards specified in SEBI regulations and generally accepted accounting principles in India. D. In our opinion, abridged financial statements derived from audited financial statements of the schemes of fund as at March 31 and for the year ended are consistent with audited financial statements. Tell me, which one do you think is the most appropriate?
So D.
Okay, Saminathan says A. So if you look at option number B and D, those are quite similar in terms of the language. Similarly, if you look at A and C, those are quite similar. See, one thing is very clear that when you are going with B or D, therein again, you are not giving the complete clarity the way you are giving it in A and C. Correct? So B and D are clearly off. Yes or no? Right? Out of A and C, which one is the most appropriate? Clearly A. Yeah, clearly A. Right? Next. Which of the following is usually not an element of audit report on abridged financial statements in accordance with SA 810? EUM, other matter paragraph, management's responsibility, CAM. I think this is quite simple, quite straightforward. Yes. Saminathan says D. Any thoughts? Prashant? Yes.
I think so. D, sir.
D. Very good. See, now when it comes to such type of reporting requirements, do we have anything in relation to CAM? Answer is no. So that's why what is the right answer? D, right? Okay, so now moving further. Okay, just give me a minute. I'll just move on to the next topic now. Just give me a minute. I'll just share one more document now. Just give me a minute. Okay, another very, I would say, interesting topic that we are picking up now. One is engagement to perform agreed upon procedures regarding financial information, which is SRS 4400. And then we have this compilation engagement SRS 4410. So we can see these are audit related services. These are not really audit. So that's why we are calling it them as audit related services. Okay. Now, let's quickly talk about both of them. Okay. And then, of course, we'll move on to some questions as well. What are agreed upon procedures in relation to financial information? As the terminology suggests, if the management, let's suppose, engages a professional in a way that management has given a scope. Okay, so it's a clearly laid out scope which the management has given. Unlike audit, see, audit Again, this is quite clear, but in terms of the scope, in terms of the procedures, auditor is quite wide open. Yes or no? If let's suppose management has narrowed down that completely, how? Management specifies what the auditor or what the professional, I shouldn't really say auditor because now it's not an audit. All the procedures which the professional is required to perform. Let's suppose that's that audit procedure. Who will provide that? Management will provide that. Means management will call the professional and ask him that please perform this procedure for me. So what do you call it as? Agreed upon audit procedure. Because it's not an audit, so that's why you call it as agreed upon procedure. Means something which is already agreed. So two parties have discussed and agreed. So that's the scope of the professional. In case of an audit, what is the scope of auditor? To come and audit the financial statements. In such a case, does the management decide what are going to be the audit procedures? Answer is no. The scope is given, and on the basis of that scope, audit procedures are then decided by the management. Auditor. Does the management have any role to play in respect of any of the procedures to be performed? Answer is no. It's up to the auditor to decide what procedure he would like to perform. Yes or no? Management can't decide that. Management can't ask the auditor that please perform these procedures and don't perform these procedures. I think we already had this bit of discussion around this aspect. Okay. Now that's what you call as agreed upon procedures. See, if you talk about agreed upon procedures, you can say this again is a very specific scope which the management may ask the professional to perform. And this could be because of various reasons. Maybe the organization has some specific requirements which they want to fulfill, because of which agreed upon procedures have been asked by the management to be performed by a professional. Yes or no? Now, in this case, it's for the management to assess what is required. It's not for the professional to assess. What will be the role of the professional? To do what the management is asking him to do. That's it. Professional will not be applying thoughts. Okay. He will be just acting upon what the management is asking him to do. Right? So the key difference between an audit and agreed upon procedure relates to what? Assurance. An audit expresses an opinion and therefore provides assurance. It's a reasonable assurance, but the assurance is there. However, in case of agreed upon procedure, is it an audit? No. So once the procedures are performed, because some procedures are performed, and we are not saying it covers the entire set of financial statements, that too as per the discretion of the management, or you can say the requirements of the management, basis which can the professional express an opinion? Answer is no, because he is not getting into the procedures of audit. So therefore, in this case, what will the professional do? professional will simply go and check. Excuse me. Yes or no? And he will just simply confirm that yes, I performed the procedure. And then give the outcome. Let's suppose professional was asked to check the depreciation calculation. So he'll say, yes, I've checked it. And if there are any fact findings, any observations, he will report that. Otherwise, he'll say, no issues. Right? Yeah. So that's what the professional is required to perform, and that you can say is the key difference between an audit and AUP. Okay. Now, when it comes to this AUP, now because it's not an audit, so the question arises that will the professional be required to apply those ethical requirements? Answer is yes. See, here again, some sort of checking examination is involved. So that's why in this case, it's very important in a similar manner to follow the code of ethics. Now, what are the matters to be agreed? Okay. Nature of the engagement, including the fact that the procedures performed will not constitute an audit or a review, and that accordingly no assurance will be expressed. Yeah, very important, because you are keeping the clarity around the scope. Stated purpose for the engagement. That's the purpose. Why are these procedures being performed? Identification of the financial information to which AUP will be applied. Agreed upon procedures is very commonly called as AUP. See, there is some set of financial information. Now, this standard is all about performing some procedures on the financial information. Okay, so that's why it's again important to identify the financial information on which such procedures will be performed. Yes or no? Because if you don't have the clarity, so what is it that you go and check? What is it that you go and verify? Yeah, so do you need the identification? What is required to be checked? Correct? Nature, timing, extent of specific procedures to be applied. But who will decide this? Management. Next, limitations on distribution of the report of fact findings. When such limitation would be in conflict with the legal requirements, auditor would not accept the engagement, which is fine, right? See, in this case, what is the scope of the audit? To perform procedures. So that's why when the two parties will agree the scope and they execute an engagement letter, what do they write therein? Those procedures. Okay, so generally what do? They will put down the complete listing of procedures to be performed. Okay, to avoid any sort of confusion which may arise later on. Yes or no? Right? So that's a very, very important part. Next, restrictions on use. See, here again, we are talking about an engagement. In which case, what do you find? In which case, you will find that it's done for a specific purpose. So it's not something which is going to be available to maybe public or various stakeholders in public. No, it's done for a specific purpose. That's why the report which will go out will also be limited to those. Okay, so that's why restrictions on the report becomes important, right? Now, in this case, what are the procedures you may find? Inquiry and analysis, recomputation, comparison, other clerical accuracy checks, observation, inspection, maybe to obtain the confirmations. Okay. Now comes the part related to report. See, this report is unlike the report you see in case of audit. Okay, or maybe some of these auditing standard we looked at. Okay, some of the thoughts that you apply. The report always contained an opinion. But in this case, do we have an opinion? We discussed opinion is not there. Okay. So that's why you can say it's a kind of observation report. Correct? It's a kind of observation report. So that's what is required to be looked at in this case, right? Okay, now let's try to look at the elements of this type of report you'll have. Now, in this case, what will you have? You will have one part as the title to begin with, addressee, okay, identification of specific financial or non-financial information to which the AUP have been applied. Okay, because that is the basis. That's the basis which you will use for performing the procedures. Statement that the procedures performed were those agreed upon with the recipient. Again, very, very important. Statement that the engagement was performed in accordance with this SRS. Identification of the purpose for which agreed upon procedures were performed. Then comes the listing. Now this listing is very important now. See, because the professional has got some procedures, let's suppose 10 procedures, let's suppose 20 procedures. So what will he do? He will put down in the form of a checklist. 20 procedures listed down. Then he'll say whether these are completed, work performed, and then he will also give the outcome. Yeah, so that's when it becomes very specific to what was required. Yes or no? Right? Okay, next. Description of actual findings, including sufficient details of errors and exceptions found, if any, of course. Statement that the procedures performed do not constitute either an audit or a review, and as such, no assurance is expressed. Something that we discussed earlier as well. Statement that had the auditor performed additional procedures, say an audit or a review, other matters might have come to the light that would have been reported. So that could also be there. Yes or no? Statement that the report is restricted to those parties that have agreed to the procedures to be performed. Statement that the report relates only to the elements accounts, items, or financial, non-financial information specified, and that it does not extend to entities' financial statements taken as a whole. Date of the report, place of the signature, and of course, auditor's signature to conclude with. So same way like you'll have in case of any other report. Okay. Now, this was about agreed upon agreed upon procedures, AUP. Now, what do you have in case of compilation engagements? So let's try to understand what a compilation engagement is. So you can say it's an engagement in which practitioner applies accounting and financial reporting expertise. Okay, for what? To assist the management in the preparation and presentation of financial information of an entity and issues a report thereon. Now, in this case, management may request a professional accountant to assist around what? Preparation and presentation of financial information. Okay, right? Now, please understand this compilation is again not an assurance engagement. Why? Because in case of this engagement, it doesn't require the practitioner to verify the accuracy, completeness of the information provided by the management. Okay, there is no audit or review required. Right? So, what are the objectives? Very simple. Apply the accounting and financial reporting expertise to assist the management in preparation and presentation. And of course, issue a report on that. Now, scope of this compilation engagement will vary depending on the circumstances of engagement. Okay, of course, yes. Now, ethical requirements. See, wherever a professional will be involved, do you find the ethical requirements? Of course, yes. They will by default come. And in respect of any such type of engagement, do you have this engagement acceptance and continence? Of course, yeah. So some sort of requirements, for example, intended use, distribution of financial information, any restrictions on either its use or its distribution, identification of applicable financial reporting framework, objective and scope of compilation engagement, responsibilities of practitioner, including the requirement to comply with relevant ethical requirements, responsibilities of management for some of these things, that the financial state information and for the preparation and presentation thereof in accordance with the financial reporting framework, design and implementation, maintenance of such internal control in relation to this, accuracy and completeness of records which is provided for the compilation purposes. Why? Because if the input goes wrong, output will obviously be wrong. Judgments needed in respect of preparation and presentation. Correct? So all of these play an important role. Now, performing the engagement. So the practitioner shall obtain an understanding of following matters. Of course, yes. See, if he were to prepare and present, does he need the understanding? Yes. Entities, business, operations, accounting system, financial reporting framework, all of these play an important role, right? So these are required to be looked at, no doubt. Now, as regards the practitioner report, let's quickly flip through that. See, the practitioner's report is not a vehicle to express an opinion or a conclusion. So what do you have in that report? Report title to begin with, addressee, statement that the practitioner has compiled the financial information based on information provided. See, for the work practitioner will issue the report that yes, of course, this was required and this is what I have done. And management's responsibility is therein. So something the management will have the responsibility on. So what is that? Identification of applicable financial reporting framework. Now, this again plays an important role. Right? Identification of financial information, including the title of each element of financial information. Okay. Description of practitioners' responsibilities, that again is important. Description of what a compilation engagement entails in accordance with SRS. Right? Explanations that since a compilation engagement is not an assurance engagement, practitioner is not required to verify the accuracy or the completeness of information provided by the management for compilation, and practitioner doesn't express an audit opinion or a review conclusion. Right? So this is more of a clarificatory thing, but again an important part because that's the clarity which is required to be included. If the financial information is prepared using a special purpose financial reporting framework, the one, for example, that we discussed earlier, so an explanatory para should be given about what? The purpose for which financial information is prepared, and if necessary, intended users, or contains a reference to a note in financial information that discloses this information and draws the attention of readers of the report to the fact that financial information is prepared in accordance with special purpose framework. Okay. And this is all about that restriction on usage in a similar way. And then, of course, you have this date, place, signature, like you'll have for any other report. Do you require an EQCR? Yes. That's all about the quality control in relation to this work. And of course, the documentation requirements will have to follow. So now what we will do is we will again move on to some questions around this. So just give me a minute. Let's move on to some questions. Okay, so let's look at this. A company asks you to carry out the process of confirmation of its accounts receivable having balances in excess of rupees 10 lakhs as per its books of accounts at the close of the year. The work to be performed only involves preparing and sending the confirmation request to such parties, analysis of variations on receipt of confirmations. Work to be performed only involves. Okay. And submission of a report in accordance with the applicable professional standard. Okay. Now, in this case, what points need to be kept in mind for inclusion in the report specifically for such engagement? Over to you. What do you think? I think first of all, you'll have to evaluate the nature of the engagement. Only then you will be able to answer this. Yes or no? Yes. Over to you. Any thoughts?
So it's engagement in performing agreed upon procedures regarding financial information.
Okay.
So 4400.
Okay.
If
If let's
that
suppose, yes.
if that is correct, sir, then I can move further on.
No, no, of course. Please move on. Please move.
So if it is correct, sir, then what points to be kept in mind for inclusion in the report, sir, will be nature of the engagement, like it is uh, confirmation of accounts receivable,
Right.
purpose, identification of the information, nature,
Right.
timing, extent of procedures,
Okay.
uh, and the findings,
Okay.
and there was no conflict, and he make a statement that procedures were agreed upon and they were performed in accordance with SRS 4400. Identification of the purpose, specific procedures were there, checklist, whether these were all completed, outcome, actual findings. He will have to make a statement that procedures do not constitute an
Sure.
audit or review. And further, a statement that if he had performed other procedures, some other information might have come to his knowledge,
Right.
and that report is restricted to these procedures.
Okay. Great. So now I think Saminathan has also added to this. So he's saying a listing of the specific procedures performed, identification of the purpose, procedures performed, factual findings, if any, restriction on the use, again, a very important thing, additional procedures performed by the auditor's statement about that. Auditor has to provide the statement for all of these things. Now, in this case, it's the practitioner. Okay. Now, in this case, it's very clear that it's AUP. So, as you rightly mentioned, some of the points you'll keep in mind. What is that? Procedures performed were those which were agreed upon. Engagement was performed in accordance with SRS. Identification of the purpose, listing of the specific procedures, description of factual findings, clarification. It's not an audit, not a review. There is no assurance. Okay. Restriction on the use. Again, very important. Right? So let's look at the next one. During the course of performing a compilation engagement in accordance with SRS 4410, it's given to you in the question itself. It becomes known to you that the client had suffered a theft loss of 100 lakhs of its inventories over a period of time at a storage location visited infrequently. Claim was lodged by the client with the insurance company, which was repudiated due to certain technical reasons relating to coverage of policy. Company has not preferred a complaint or an appeal against said repudiation. Amount is reflected under the head current assets in the trial balance of the client. Discuss how you should proceed to deal with this matter. Yes. Any thoughts? So let's look at this, right? See, in this case, amount of 100 lakhs reflected under current assets. Since the client's claim has been repudiated and no appeal has been preferred, it's a loss for the client. And therefore, amendments are required for the financial statements not to be materially misstated. If the practitioner becomes aware during the course of engagement that the amendments to compiled financial information are required, okay, the practitioner shall propose the appropriate amendments to management. If the management declines, practitioner shall withdraw from the engagement and inform the management, including the TCWG, of the reasons for withdrawal. If the withdrawal is not possible, then he will have to look into the professional or legal responsibilities, whatever is applicable in that case. Right? Now we'll look at one case scenario and we'll just try to look at some questions around it. KM Limited has engaged your firm for compilation of financial statements. You also come to know that the company is setting up a new unit in Rourkela, Odisha. Company management has provided you with draft trial balance and requires assistance in preparation and presentation of financial statements for the year ended 31st March 24. Management requires such a preparation and presentation for its internal use. During the course of engagement, it is noticed that there are apparent errors in few opening balances brought forward from previous year related to some outstanding incentives receivable from government authorities. These have been swapped with some other balances in the trial balance. However, there are no credit transactions in such incentive accounts or accounts whose balances have been swapped during the year. One of the team members suggests that it's one of the duties to ensure revenue figures stated in trial balance at least are verified to ensure all revenues required to be booked have actually been booked. Means it's about ensuring completeness. It's also suggested that even though it's compilation, quality control has to be there. Before signing issuing a report under this SRS, you once again read the financial information and it comes to your notice that the figures relating to setting up of a new unit of a company have not been properly disclosed. Disclosure issue. Expenditure was incurred from a bank account maintained in Rourkela, omitted to be shown under appropriate head. You are vacillating regarding above considering scope of compilation. Team has prepared detailed documentation as required. Now, in this case, just give me a minute. Okay. Now, in this case, in respect of the errors in some of the opening balances noticed as described in case, which of the following statement you think will be the most appropriate? Such errors should straight away lead to qualification of a report to be issued. Such errors should be brought to the knowledge of the management. Knowledge of such type of errors has no effect on compliance of ethical requirements by the firm. Above said matter relates to SA 510 and has no effect on reporting obligations in a compilation engagement. What do you think? Which one you believe is the most appropriate out of these? Swaminathan says B. What about Prashant?
B, I think so.
B. Yes, very good. So I think it's quite clear. Such errors should be brought to the knowledge of the management, undoubtedly. Now, as regards suggestion of one of the team members regarding verification of all revenues of the company, which of the following is most appropriate? Suggestion of team member is proper, as such verification is part and parcel of such an engagement. Suggestion of team member is proper, as the absence of such verification may make financial statements misleading. Suggestion of team member is not proper, as verifying the accuracy, completeness of the information is not required. Suggestion of team member is not proper, as the compliance with qualitative requirements is not required. What do you think?
C.
C. Okay. And I think Saminathan is also going with C. So very good. See, when it comes to a compilation, we have discussed that we are not auditing. There's no review going on. Okay. So do you get into this verification? Answer is no. So that's why, what do you do? C is the correct option. Third, I think even though you can see the answer marked, but still some thought process will definitely be required. In view of suggestion of the team member relating to adherence to appropriate standards for quality control, which of the following statements is relevant in the context of above engagement? SA 220 you'll say is applicable. SQC1 is applicable. Both 220 SQC1 are applicable. SA 220 and SQC1 are not applicable. Yes, over to you. What do you think? Which is the right option?
Sir, B.
B, very good. Saminathan also goes with B. So very clearly, SQC1 will definitely apply here. Correct. Next. Which of the following statements is most appropriate as regards omission of expenditure under appropriate heads relating to Rorkula unit in compiled financial statements? Most appropriate one. Above noted omission can be misleading. By disregarding such an omission, fundamental principle of integrity is violated. Engagement cannot be performed in accordance with ethical requirements. Above noted omission can be misleading. By disregarding such an omission, fundamental principle of objectivity is violated and engagement cannot be performed in accordance with ethical requirements. Above noted omission has no effect on performing compilation. Above noted omission has no effect on performing and issuing reports under such compilation engagement. Which one do you think is the most appropriate answer? Tell me quickly. Saminathan says it's A. Okay. I think clearly it's A because this integrity is violated and therefore engagement cannot be performed in accordance with ethical requirements. Yeah. So with this, we are through for today's discussion. And once again, thanks everyone for your time and for this wonderful participation. Yeah. Thanks.
Thank you, sir. Thank you very much.
Yeah, sure. Thanks. So Ashok, we can close this now. Thank you. Good night.